Here we are looking at the 30-30 list as a final time for the year of 2024. We look at the top 30 momentum companies on the ASX, and then we look at the top 30 launchpad stocks, the ones that have had the best improvement most recently in the last week. Gary Glover gets to go through the list on a Thursday afternoon when he gets it at the same time as all of the members. Strolling through the list, and he'll share with us the best insights, trading opportunities, and lessons that come from these two lists. The members get the list at the same time and get to send through requests, which we've got a fair few of to look at today, and we'll cover those. Plus a great question about portfolio management and moving averages. We'll cover that right at the end. Gary Glover, good morning. End of silly season, end of the year, and the market's doing a lot for us. So how are you?
You know, I'm pretty good. Yeah, pretty good there. Market's looks a little weak over Christmas there, so the Christmas rally's in doubt, so that's a little bit of a shame. But as I say, I think the Dow and the Nasdaq have hit those key fib levels, and that I think the S&P got within 20 points of that key level. So I think, to be honest, I think those are strong resistance points there now. So I don't think the market's going to go through those for the next 6 months. If I look at those historical precedents there of those ranges being squaring out. So all those previous squarings there have kept the market at bay for at least 6 months. So, so just might mean a bit of a choppy first quarter of the year, and might be the second half before we push back through them, I guess, on the other side. That was when we won't talk too much about the 50. We covered that on Tuesday. Mac gets fat as momentum stocks.
Yeah, you go watch that on Views Day, because the stats in there just blew me away. I really loved that. And it gave me a great comfort to go into 2025, having that background of statistics. But as you mentioned, yes, today momentum, we're looking at the top 30. One that was talk of town yesterday was Mesoblast with some positive news. And you've got some good insights into how you look at it, not just as what happened yesterday, but in preparation of what happened yesterday and how that leads to your studies of market leaders of the past 5 years and longer.
Yeah, just talking earlier, I mean, like one of the things from the model book that we noticed there was that when the stocks made the 52-week highs, and particularly when they broke through to new highs on pretty solid volume, that was a pretty good indication of that was a good sign for a lot of those top performing stocks. So keeping an eye out for stocks making 52-week highs, particularly on strength, is a good lead up to potentially, what could be a strong stock here. So we did see this here with Mesoblast there. You remember there we did have a breakout here. It didn't sort of follow on there, but the next sort of break here, we had some pretty good volume, had a good breakout of that 52-week high. So it did go through, did pull back, that little AVC come back to the range here, and then it did set up a first sort of high low in here. And but I'll confess I did see this, and I did buy that B-wave break there, Chris. But I traded some into the heat, and then I tend to use the 10 or 20 here. I got stopped out on the pullback there, but I did get back into this thing, unfortunately. But the whole thing got a little loose here. That's what I didn't really like this bar here, because I like to sort of see them tighten up here. Where this thing was a little loose there, but look, it did give you another little B-wave break here. If I was on guard here, you could have bought a break of 176. But yeah, it's had a fair move. So look, it's probably one to watch there. That's obviously that gapped up on the FDA approval of that sort of in the knee area. But the stock ended up must have opened up 15-20% up and finished up about 50% for the day, which is a massive move. So that is an episodic pivot, gapping up on good news and then rallying through. But like a lot of that stats, Chris, on those EPs was anything over 14% tended not to be aware of those. So we've seen a few there. We sort of like, remember we had one actually had an episodic pivot back in April, and then it sort of had one more day, and then it retreated there. So if you look at those classifications there that were done past there, chicken, ducks, and swans there. Sometimes they can come back up. This is not a bad setup here. If they do run a bit hot like this, they will edge back and then maybe come back to moving average. So this has gone way probably overboard here, too big. So yeah, good for those, but in now you probably want to see this have a three-way pullback into moving average, and look, moving average is a long way back here. So maybe this is going to take up a bit of time here. But yeah, it's pretty good news there. I was saying, look, I do know a little bit about mesoblast and the stem cell, mesoblast have been laying, instead of just focusing on one area and trying to get the costs down, they've really tried to land grab all the different, so they've got knees and back and all different areas. So they spend a lot of money, have raised a lot of, they've had to go to the market continually to keep, raising dollars there. So, but it is an interesting area, the stem cells. The thing I like about stem cells, if you look into that area quite deeply, is that if stem cells work, it's great. If they don't work, they don't. There's no sort of residual effect there. So, but they'll either sort of do their thing. If you inject them into the knee or cartilage or just wherever you inject them there, they tend to either help the area, but they don't, if they don't help, then they don't hinder. They tend to just sort of flush through the body and move away. So, and that's kind of there's no sort of not any negative side effects there, to the point where Japan, actually, I must have been probably a decade ago, Chris, they were so convinced by stem cells that they've basically got rid of phase 3. So you only have to do phase 1, phase 2, which is obviously a lot smaller trial sets to get approval to use stem cells, because they're convinced that stem cells is the way forward here. So definitely an area to keep an eye on here, because this is definitely a game changer for the company, because it's taken a long time to get FDA approval. So you get one approval, this could, they've got about 9 different patents on different parts of the body here. So one could be the, unlocking your door for a lot of them here. So 50% moves too big a jump here. So it's probably, quite exhaustive, that type of volume there. So it's going to have a breather here, but definitely should be on a radar here. But I'd like to see this retreat here for, just come back to one of the moving averages there at least anyway. So, but yeah, one to keep an eye on there. Might seem like exhaustive there, but this is an area that's, you got to look at that. The data looks a bit crazy there, but you look at the weekly, we just sort of wound up here. So, we did that nice sort of cup and handler here, broken out of that move, and then had a bit of a move here. So we just want to see some sort of consolidation there. We want to, see something like this tighten up here again. But so it should be on a radar there, but I would not be chasing this up to this monster move. It'll probably retreat a bit there.
Right. And that was obviously on the momentum list. So you've got next one, PTR, which one of the days we sent out to members and said, look, 10 points to whoever can spot this pattern. So which patterns do you see? It's now a little bit later. What are you seeing with PTR?
Look, I mean, there was an EP obviously, gapped up there on pretty good news, good volume there. So you followed through since then. It's had a little bit of a retreat, a little bit of a VCP in there. I guess the thing that you didn't see too much, there wasn't too much selling here. As I think we talked about some of these stocks that jump out of the gates when they pull back. Look at those 3 days, 1, 2, 3, no selling there. So that's what you're looking for there. I think had a couple of days up, and then all of that again, another day, another down day, still no selling. So they can pop up. This is one to keep an eye on here, because it has retreated back again. So now we've had that 1 day of selling, but there's still no selling going through there. So come back to the 20 EMAs. This is a pretty interesting level here. So what I do like is there's just no selling here. So I know the market's a bit weak, but yeah, we still haven't seen any selling here. So just writing that code down to make sure, add that to my watch list and keep a close eye on this one there, because that's not a bad setup. It's a bit too small for me, but to be honest, there's not a lot of stocks setting up at the moment. So maybe you can make a slight exception. Go small here. I think SHG, which was one that I missed as well, that's been pretty strong as well, because pretty healthy volume here so far. Again, it's under that sort of 30 cent mark. I like them over 50 cent personally. So that's sort of one of the things I prefer to look at. But yeah, this one's been pretty strong as well. So yeah, just not much of a pause in there so far. You like to sort of see some congestion there, but it's a little gappy, that sort of stock. So not the most liquid. I think number 9, before pay. This has been pretty solid here. It's been building quite nicely. There's you've had a few good, had 2 nice VCPs in there, Chris, as well. So saw the whole thing tighten up in here, all the range tighten up. Then we got a little B wave break, and because it stayed tight, it's low risk. And then we saw another little tight congestion in there. We sort of got that, those 3 or 4 day tight days, no selling here, just under the high. So popped through. So, and again, I was looking at this yesterday, sort of what stocks were holding up, and there's just still no selling here. So considering, the market's pretty weak and this is pretty high here, there's still no selling going on there. So that still looks pretty robust to me. So,
Getting pencil out, he might be adding that to his list.
I'm just highlighting those colours, what I'm trying to do. So, it's funny. It's good doing sessions there because it's sort of, as I look at them and talk about them, I'm thinking about them as well. But yes, that's a pretty robust one there. The one we've seen those stocks. So we're sort of in that, having gone through those model books there, there's certain things you see over and over again. So those are things we're sort of watching there. And of all the stocks that have done pretty well here recently, they've all got the same characteristics over and over again. So just going to be looking for those, certain things there. So the VCPs, the relative strength, the high volume moves, the putting back on light volume, 52-week highs, just always classic things. Those are the sort of things we're looking for here. VR1 was one that I just sort of highlight because I thought it's had a pretty good move, good volume. It's a little small for me, but has pulled back. Bit of volume there, but came back to the 50, bounced again. Okay volume, pulled back, lighter volume again. So could be tightening there. It looks not the worst looking stock. Kogan looked okay. It's some good volume there. It's it took a little while to get above that 50-day moving average down. Definitely a little bit of a shakeout there, which is not, you wouldn't have liked to have seen that loose activity, but what it did do was that next 3 or 4 bars there, it did sort of tighten up there. So, you probably ended up with an NR4 there where you got 3 or 4 tight sessions in a row there. And then, the whole thing sort of did break out here. So, there was a good volume bar there as well. So, and again, it stayed pretty tight here. Wasn't too much selling there and moved on. And that sector's been pretty robust as well. So, that's, the beauty of trading in strong sectors. BVS, sort of a bigger cap here. Look, this is a pretty impulsive move. Look, it looks pretty stretched here, but again, all we've seen so far is just a really nice tight consolidation. This was a pretty good volume. So we've got an episodic pivot there, sort of good update, strong result. We move through. So we know sort of, the study of those sort of stocks that get upgraded. We look at them down a month or 3 months down the track. Most of them are higher. They've kicked on higher. So, this is a good volume here. Pull back here. The volume's drying up here. So nice little ABC here. So this is still in a pretty good position there. The only thing I will see is that we're seeing stocks gap up here, do the pullback, and then run up to new highs, but not going exceedingly high lately. I've noticed that a lot of them are doing like fifth wave sort of style. So they're going to new highs, but only just, I think Codan was a good, PDA, sorry. It's a good example there. It's sort of, tightened up. Whoa, up there. Sorry.
Oh, that is frustrating when that happens. You accidentally drag something in IRS and then move it in. And
that's all right. Well, I'm going to have to delete this thing here.
I'll pause the recording for a second. Will that work? So technical movement changed on Iris and got moving averages back where they should be. BVS, you're talking about, they won't get new highs, but this breakout, they're sitting up You were talking about, sorry, the new highs breaking out 52-week highs.
Yeah.
It's
So
really shooting much further.
so we're sort of doing that, running up pretty strong, consolidating, and then we're expanding to new highs there. So see how we've got a new high just tipped over. I mean, CVA has just done exactly the same thing as well. It's done a nice little tight formation, pretty extended, and then just needed to pop out here, and then the whole thing gives up. So that's the only thing I'm seeing a lot of these fifth wave consolidations going new high and failing. So just, if you're trading those congestions, just make sure your stop's pretty tight. At the moment, I'd be probably using that 10-day. I'd be probably even tighter than I normally would be on that moving average there, just because a lot of them are failing here. The next one's actually a good example there, because email's been, again, pretty strong stock here, some good volume there. So we had our nice episodic pivot there on some pretty good news, good volume, and we've pulled back here. So far, it's been pretty tight here. So, all things, we've sort of got a couple of reversal days here. Volume's been pretty light through here, so not too selling here yet. Just looking for this, it'd be nice for this thing to tighten up a bit more. If this thing can sort of tighten up here while if the market stays a bit weak here, this might be one that sort of might come out here. I thought DUB, probably too small here, probably a bit late there, sorry. LRL, this is one that I thought looked pretty interesting as well. That's had a pretty nice move there, some pretty solid volume all the way up there, and it has sort of dried up here. But yeah, look at the volume really tapered off there, so the whole thing's remained pretty tight there. I did look at this yesterday, just 53-year-old brains forgetting what the stock was about, but it's
Well, it's under 30 cents. So 30 cents, 50 cents might negate it from us actually trading it on our personal accounts, but doesn't negate the actual trade, the setup, and
well, it just looks weird, Chris, because I looked at this and saw volume all the way through here, and then now the volume's dried up. I thought, something's happened to change that.
And happen.
Yeah, but they did raise some money here, I think, but then it hasn't caused any sort of selling here, so it's actually stayed. So I'm pretty sure this has actually done a raising there already. So, but yeah, pretty tight action there. The volume's definitely dried up here. There's a few little shoots here on some of the up days, so that's sort of encouraging.
Just looking through Iris, on the 4th of November, there was a 1 for 10 consolidation.
Oh, okay. Yeah.
That might be where the volume crosses over.
Yeah. Okay. So that'll explain actually why the volume's tapered off here.
Quite frustrating for us to use charts and look at the differences in volume, because you're not comparing apples with apples.
Yeah.
Those splits and consolidations have that impact, which makes it hard. But
okay, that might make it slightly less appealing, but you just have to do a bit more homework. That's all when you're looking at it. So
you can run sometimes 10-day moving averages on the volumes, and then you can sort of get relative performance in the last month or two.
Yeah,
tricks to that kind of stuff, but it is more work. But IFL, how's that chart look?
Yeah, I think this has been pretty solid actually. Number 28 there. Something I saw recently, Chris. I don't know. I was watching one of these US videos there. They're talking about these sort of bull flag type of patterns there. These sort of bullish consolidation. So you get obviously a strong move and pullback there. And he was suggesting there that the best ones had the 6 touches. That have your sort of because oftentimes you get a three-way pullback. You think you're ready to go. That's how they often normally break out there. But he was saying the better ones actually. He was saying he prefers to sort of see the 6 points. So like the 1, 2, 3, 4, 5, and then break above that. So he likes to sort of see that more than just your ABC. Actually have your so that'd be your 1, 2, 3, 4, 5, 6 points there in your channel there. So seeing the 6 touches there, he liked that. So I thought it was pretty interesting. Didn't really have any, there was no evidence around that. Just an observation from this trader there that he liked those sort of 6 setups. I thought it was something to watch out there. I know sort of recently I've seen a few do something similar. People worked out pretty well. So maybe he's onto something here. So but That was the momentum list there, Chris.
There were just only two that you didn't cover on the request side of things. So WBT, Weebit, which was number 30.
Yeah, I think we covered this one last week there. It's had a good run and pull back there. Yeah, I don't know. It's not sort of setting up. I mean, this was a nice little setup here. It's pulled back here, and that's come just under the 20 there. But then it started to set up there. Gave us, that's a little B wave for me after a pretty strong move there. But you did see there was a bit of selling in here. So that was the only negative I sort of saw. There was you had one day here, second day, a third day of selling, the end day, and then you had another 2 days of selling. So those I think of those sort of 6 or 8 down days, 5 or 6 of the 8 were reasonably heavy days. So that's probably maybe the precursor there to be careful. You want to sort of see, but yeah, maybe it's sort of going to come back and use up a bit more time. So just a little bit more distribution in there than you'd like to see there. Yeah, it was a bit like the Dow Jones. I mean, the Dow Jones has had, I think, of those first 8 down days, I think there was 5 distribution days in the first 8 down days. That's a bit negative, seeing that sort of volume there. We only saw 2 on the NASDAQ, 3 on the S&P, so I thought we might see a few more, but they've ended up.
Market came in heavy, and here it is.
Yeah, so the wax come pretty early on the other 2. But yeah, the Dow did distribute pretty good as well. So
last one on the momentum list, is BOT. So I think it was break 23.
Oh, okay. Yeah, this one's actually been reasonably strong here. So it has come out here. So look, definitely want to keep an eye on there because so far Chris is staying in the top half. So if you look at this sort of, if we zoomed out here, it's a pretty strong year there. So far it's in a bit of a holding pattern here. So like to sort of consolidate there. But yeah, it just feels like it's in sort of caught no man's land a little bit there. Some people would probably look at this thinking there's a bit of a head and shoulder pattern there. I'm not a big head and shoulder sort of guy. I think this might just go through a bit of a, might just go range bound for a while. It's had a pretty good year there. So just sometimes McLaren used to say you either get a correction in price or you get a correction in time. So, if this has stayed pretty high in the range, that's a good sign, healthy-wise for the stock. Just might need to use up a bit more time there. So, just might use up a bit more time there on that correction here. But definitely should be on our radar there. But you might find it might just sort of stay range-bound. Maybe it might sort of sit in this sort of 30 to 40 range there. But if it maybe... Ideally, what I'll do is maybe congest in there. Maybe we get a VCP in there over time, Chris, and then maybe come out of it, maybe second quarter of next year or something, or maybe in the first quarter, something like that, So, it's holding up pretty well.
That's it for the momentum leaders. And some requests that we've had previously is to talk about the themes that Gary and I share throughout the week and what we've seen. And just looking at the report from yesterday, we do see the momentum leaders. Number 1 is billing services, and that encapsulates buy now, pay later, as well as a subset within that group. But what Gary commented on before was like last week in the Friday report was that we were seeing a lot of listed investment companies and active managers where the value of their assets can actually trade above or below the value of the portfolio. So the share price can trade above or below the value of the portfolio or the net assets. We are seeing 71 financials within the top 200 momentum companies, which is pretty heavy. But we've got the banks and so forth that we've seen, and we've seen Hub24 and Net Wealth shoot out. But 30 of them are in the wealth management, financial planning, and then 36 of them are listed investment companies and active managers. That may fit in with what we've just seen in the market, where it has come off a bit. And as Gary said, if the share price, if you add all the value of the portfolio up and they're $1, but they're currently trading at 85 or 90 cents, that share price is less likely to get hit because it's already trading below its value. So then the value is just coming back toward the share price. So that's typical of what we'd see when the market does get hit like it was yesterday and is getting hit today. And then the other insights, there's still a mixture of tech companies and specific commodities in there. About to move into the weekly launchpad leaders that Gary will pull out his favorites from. The precursor to that, we often like to see which themes are leading in the launchpad, because generally 2 to 6 weeks later, we'll see them light up the momentum leaders. Uranium, gold, lithium, property have all been themes within the last year or so that have shown. 44 companies in those top 200, they're in the property space. 39 of them are listed property trusts. We still have a lot of those listed investment companies in there, which flows into what we were talking about before. They're not going to fall away as much because they've already fallen in a sense. But we look in the top 10, more than half of them are still in that property space. If we look beyond that, we're then seeing things like international transport, food producers, the banks are still in there, domestic transport, diversified property, internet. So not a huge theme coming through just yet. Nothing that's getting us excited to then drill down into depths of finding the trading opportunities. But it doesn't mean that there's an opportunity within those LICs and those property companies. I'll hand back over to Gary to get into the specifics of the chart and what he sees in the launchpad leaders.
Yeah, number one was 6. This is a smaller name here, but yes, stay pretty robust there. I noticed PMT was number 2 actually, which is interesting. The Patrick Metals, obviously that's a sector which has been pretty weak. Yeah, obviously a bit of news there. IXE, which is the Archer material there, that's actually had a pretty nice move there. Did come back to that 50 there, Chris, and then kick up out of that. So a little bit of a B-wave break. There's some pretty good volume there. So the fact that this has been pretty robust in a pretty weak market tells us we should be keeping an eye on this one. It has been sort of building there. We just want to sort of see, we'd like to see this consolidate, tighten up here. But the fact that that's done pretty well is solid there. I thought Iris was a no, only because it's been trending down. It's just rallied back up to the 50 where it's the break point. So if anything, when when you break down and break the 50 and you go back to retest at 50, that's usually the point at where Piscatcher and Morales would be shorting the stock. So that's what they're looking for, that, break the 50, come back, retest the 50 and roll off, So that's a good, probably that's just the type of short they're looking for yesterday. Yeah, that was EZZ was one that I thought looked pretty good, Chris. This did, 2 things about this was that it did come back in I think this came back 50% price. So basically halved in price. So, which is obviously, we know 50-80 rule, half all these momentum shares, they're all going to, 80% are going to come back 50%. I thought this is sort of what, had a pretty good growth, this company there. It's still pretty small. I know it's got it does a lot of business in China there, but its growth has been pretty spectacular there. And it's in that sort of nutrients, vitamin sort of space there. So wellness and living long type of, which has been, pretty strong growth over that. So, but it came back to the old high. Did have a little bit of a bounce there, some pretty good volume. Did tighten up in here. Did do an NR4 there. I was watching this one there. And it popped out, didn't look back here, but I think it really fired out of here. But it's now pulled back again. But volume's still pretty light here. So this is definitely one that's, considering it's holding, it's showed some strength there when the market's been pretty weak. Definitely one to be sort of keeping an eye on there. So I just like the fact that it's sort of come back to a good point here. So now it just needs to build a bit of a base here, Chris. If we're going to hold here, potentially maybe this could happen on the leg here. But like we know, when those leading stocks have that 50% drawdown, it's not necessarily all over. Like we do know a lot of them can resume the trend there and can have another leg up there. So yeah.
Whenever you say that, I'm consistently reminded of the stat that you gave me about Amazon in 2000 falling from its highs. I think you said 94 or 96% or something ridiculous like that. And now we know what Amazon looks like today. It is possible to recover.
Yeah. I mean, I think Afterpay's had a couple of big run up and big pullbacks. I think we've had 2 50% drawdowns, Chris. So normally Tesla's had 1 or 2 as well. So yeah, some stocks do. But yeah, so EZZ is still looks okay to me. The fact that it's holding up here is a good sign. RBY is pretty interesting. That's sort of like, this is one that I thought looked really interesting on the weekly. I've actually had it on my radar for a while here. It's a big VCP on the weekly set up there. Just not sure I look at the fundamentals there and it just doesn't grab me, but chart's sort of interesting, but has broken up here. And the fact that it's popped up here when the rest of the market's been getting belted is pretty interesting. So, yeah, but look, it's definitely one to sort of keep an eye on. But yeah, looks okay there. When you got a VCP, it's popped out of here, had a bit of a run, but yeah, it's not the easiest stock to trade liquidity wise. So, yeah, but some okay signs there. TCL,
It's rare to see a company like this in the list, isn't it?
yeah. But it's saying that had that little bull flag there again, just sort of had a bit of a pop here, some good volume in there. Then it sort of had the little ABC tightened up in here, little undercut, and then gone through. But yeah, it's a little messy. Does do these little three-wave consolidations and pop again. So
Could have had 6 touches when you're talking about those bull flags.
yeah, it's probably got more 3, but look, you might find a few more touches in there. Yeah, it's probably got a few in there. Yeah, it's definitely a bit volatile there. It's a little loose in there. You'd probably look at that volume profile. It's a bit messy there. You'd like to sort of see them have that really strong run up and then them lighten off there. But this is it's pretty much the volume stayed pretty active the whole time there. So it's not any great sort of signals. Not typically momentum. More of a bit of a range bound sort of stock as well. But yeah. LOV, I sort of like, again, this one didn't enthrall me just because it is a bit of a growth stock there. That's typically sort of that fourth wave congestion, and then you go to a new high and fail, and then we've got a lower high and another lower high, and then still up below the 50. So, this has still got risk written all over it for me. So I'm a bit, even though quite a few stocks in that sector have been pretty robust there. I can't see anything to love about that stock yet, no. So, still got quite a few negative signs to me. DXC, I mean, a bit boring the stock here, but again, show a bit of relative strength there. So, not really a high momentum more. Thought FAR was pretty interesting there. The nice little cup and handle here, Chris. So, pretty strong trend here. If I zoom out, yeah, it's just a kind of long-serving trend here, but look, it's probably been a bit of a dull sort of share there. But yeah, it's just want to keep an eye on there. It's just not the strongest tape here at the moment, but definitely got a bit of a cup and handle there. So just one to keep an eye on. BRN, yeah, this is probably one of the better looking charts here, Chris, as we sort of said. Put this up earlier. Because, I mean, it's not really, I consider this a bit of a risky stock here, but did have a win the other day, give it a bit more credibility than it had, which was probably not much previously. So now we're starting to get a few contract wins, maybe make some money here. So maybe people will start to get a bit more alert to this thing here. So I did watch this here, so I thought maybe this might get through this was like a little B wave for me, but didn't crack it the other day. So ran up there and faced a bit of selling it. That's a problem there when you've got these stocks that are been trending down for quite a while. There's a lot of sellers, a lot of losers there in front of you. They really sort of makes it hard for the stock to get going here. So, but not a bad looking chart here, considering how weak tape is. Actually looks okay. So, look, BRN looked pretty good there. Nice VCP. Look, PEX was pretty. I think it's had a nice sort of. Again, it's sort of like this is like a bit of an expanded top here. So I went to made a false break there, went to a margin near high. So that tells me that it will come back, retest the previous swing low, which it's already done here now. So then it actually came back again and actually made a false break, went slightly lower, and then it's bounced out here pretty hard here. So this is one to keep an eye on. It might actually sort of congest back here. I still think this stock's doing a bit of growth there overseas. Just haven't really put it together yet, but definitely one to sort of keep an eye on that. So it's a little loose. You'd like to sort of see this have that tighter price action, but I'd be keeping that on my radar. AOF. Just a big volume here recently, a bit small for me. But still in a strong down. But had a strong year and a pullback. It's still stayed in the top half here so far. Some good volume there this week. So just sort of caught my eye as to maybe something going on. But the reality is we're still basically got downtrend. We haven't broken swing high yet. So we really want to be breaking above there. TLG I thought was interesting there. Sort of like not a bad little setup here. Just come back a bit deep because we like to sort of again see them in the top half. So if they run up, we want to see them pull back in a more of that squarish sort of thing rather than if you look at the ones that actually haven't been working are the ones that sort of come back a lot deeper. So they come back over the 50%, they might come back 60 or 80 plus, 3/4 of the range. So we're coming back 3/4 of the range. You're not often sort of getting that good bounce there. So
And just on that late October, looks like an episodic pivot. That percentage rise going from low 40 cents up to 54 on the open. Percentage wise, that's outside that positive range, isn't it? So the episodic pivot that sort of lends itself to that pullback. We're looking at the October break.
Yeah. It's too big a gap again. It's sort of like it's funny those rules. They're quite interesting. Those that analysis there. Definitely puts a lot in context there. Anything I noticed, Chris, I did have a quick look yesterday just to sort of see what stocks were sort of strong. So DUR was strong, the EZZ which we mentioned, or PRN, which that showed that there's that sort of strength, and then you tighten up here and do a little VCP, and then you break out the whole cup and handle that. That's been a good little setup because that sort of just continued quite nice. I mean, gee, considering how weak the market is, that was up big yesterday. The market was down. That's amazing. So I thought that was pretty strong. AHC was one there, smaller name, cup and handle. I was just looking at what had held up the best for the week. RDY was on the list. I think QFC. Satire, which is, I didn't want to judge this one because I'm a bit negative on this one, but it's actually rallied this week, which is interesting, even though it still hasn't broken a swing high, still a pretty strong downtrend. SXC had a bit of a rally, but again, a strong downtrend, so let's put that aside there. High Pages again had a bit of a bounce this week, but again, a bit of a downtrend. So you want to be sort of seeing, some more sort of signs of strength there, or before you look at these there. So, only other one, the only small one there I saw was oil there, because that's had a pretty strong year, had a bit of a consolidation, had the whole thing's tightening up. That's sort of one to keep an eye on. I saw I-88 was sort of one that's actually that's the uranium play there, like a relatively new listing. Is in my 100 club because it has that big jump and then a bit of a pause here. So, they're going to be drilling there in January. So market's probably getting a little excited a bit early here about drilling, but their first drilling results was probably some of the strongest hits ever seen, actually. So so bodes well for what might be ahead there. But again, there's some risk with those, but considering the high grades there last time, it's definitely one to keep an eye on.
That's a good strength.
Yeah, that's mainly it there. I did see something, Chris, which caught my eye. And it was Paul Tudor Jones was getting question on trend following and range expansions, and it was so when you see a range expansion, the market's sending a very loud, clear signal that the market is getting ready to move in the direction of that expansion. That was sort of something out of Wizards there, and so recently, I think you were sort of asking, do you use trading systems at all? So we've tested every system under the sun, and amazingly, we have found one that actually works. Well, it's a very good system, but for obvious reasons, I can't tell you much more about it. But when asked about whether it falls in a contrarian, a trend following, basically sort of said the basic premise of the system is that markets move sharply when they move. if there's a sudden range expansion in a market that has been trading narrowly, human nature is to try and fade that price move. When you get a range expansion, the market's sending a clear message. So you're talking about waiting for those narrow,
Congestion, spoil, compression.
yeah. So when you see when the market trade narrow, so when it breaks out, it tends to follow through. A lot of people will fade that breakout. He's saying, history says that the breakout will usually kick on there. So, better results. So there's no systems without its, failure rates there. But yeah, seeing that sort of tightness and coiling up and then the acceleration there, those are good sort of signs there. So that's the type of thing that we look for. And the beauty of that is that you keep it pretty tight on your risk as well. If you get loose patterns, as Kalamagi says, loose is for losers and tight is for winners. That's what you're looking for. You're looking for that tight congestion sort of price action, tighten up there. So.
Well, that's a good insight and a segue into the question that we had, which was talking about moving averages. And if you're talking about systems, none of them are without their failure rates. They all have it. There is no perfect secret sauce. I do love Thomas Polkowski calling sector and thematic analysis as being the holy grail. But the question was about moving averages. And I haven't shared this question with Gary yet. I thought I'd throw it on him in the mid-interview. But he has touched on a few things already in what he's shared with us, and the importance of moving averages. So the question was about, well, is it possible to use an arbitrary when the 10 is above the 30 or the 10's above the 50, whatever it is, when they cross over or when it's above it, we buy, and when it's below it, we don't. And off the top of my head, I'm thinking of, Gary's mentioned about Gil Morales and Chris Karch using the 50-day moving average. We've seen that in their books, and then talking about shorting when it's below. I know Tony Turner, writing a book 25 years ago, she was talking about not buying anything under the 200-day moving average. And then there's the CTA traders that consistently use the two moving averages crossover and just trade that as a blanket momentum trade. They get a lot of whipsaws out, but they get the mega trends. And we know that Rivkin, he was using what I think he called the golden cross with, I'm going to try to remember, I think it was the 10-day moving average over the 50-day or something like that. From where I've seen what I've read, and I've read this for decades of different traders, very successful traders, and they go back for decades, over a century. It's a way of filtering their universe down, to cutting it down and saying, look, I don't know if I'm going to get every single leader and every breakout. There will be some that fall outside of this universe, but I know the vast majority will actually start from within this universe, and that's what they use the crossover moving averages to just narrow their focus and increase their probabilities within that subset. So that's my thoughts on it. And that's probably hopefully giving Gary enough time to think about, what are your thoughts on using two moving averages, a bit of a crossover. One has to be above the other as a bit of a blanket rule to buy, to be eligible to buy, or to rule it out of viability.
Yeah, I have seen people use the MAs before, even some shorter term ones. I had, a decade ago, I had a couple of guys who I think they were using might have been down 5 and an 8 or 5 and a 10 or something there on NAB, and we're just buying options calls every time it crossed up. So yeah, I mean, look, some of those methods, they're pretty raw and stuff there, but I mean, look, the beauty of those is they're pretty tight. So they're sort of like, you just follow follow the system. It's a bit like the trend trading there. So if you look at those CTs there, so you know that they get ripped up a little bit when they, because sometimes the market will go be choppy. So you might, you'll have that losing period there. But when the market opens up and then has a big move, they catch that big move as well. So you're relying on, so you don't know what you're going to get for those sort of systems. So you just have to follow the system. You have to understand that you are going to be fraught with some losers there, but when you get the winners, you got to be able to hold them. So it's having a system there and actually being able to trade it correctly is two different things. So oftentimes, you might get chopped up and you stop out, and then you might get chopped out 3 or 4 times, and it reverses back, and you go, the next time I'm just going to not chop myself out, and then it goes a lot lower, and then you lose everything, and then. As soon as you get a big moving up 3 or 4 days, you go, this thing hasn't moved more than 4 or 5 days. I'll just take a profit instead of hanging on. And then, but you have to basically, with those systems that you have to live and breathe and stay with them. So you actually have to go through the bad times to get the good times. So you have to really just follow that, the ethos of that system. That's the beauty. Like, if you look at every sort of strategy, every strategy's got its sort of its.
So you got to accept the good and the bad of the strategy, and
Yeah. So every strategy's got its pluses and minuses. It's good, but you have to sort of accept that. I think if you understand what the good and the bad is, then you get to trade around. That's the way to go. I mean, well, I know that like William O'Neill, he doesn't. If the stocks break below the 50, he's out completely. If every stock he owned crossed the 50, he'd be completely out. So his system is about trying to catch the big winners, the momentum there. So when they're running pretty hot. So if you think about TME, so he might have got stopped out here in February. He might have got stopped out here in April, and maybe stopped out here in August.
he's quick to re-enter if it has.
Yeah, if you're looking to sort of come back in, once he might be coming back in. I'm not sure if he's buying just on a 50 moving average there. You might look for some sort of little setup there, but he'll generally stay in here. I mean, he'll might try and trade some into heat. Might try and. He was more of a longer term. I think he was more of a weekly trader. But if this broke below the 50, he would be out. So if he's ridden this from say 140. And this crosses, say by the time it crosses here, say it's at 225 or 230, then he'll be out. The system crosses below that. So I know Mike Webster is one of the IVG guys there. He uses the 21 day. So this is the green one is the 20 day. So he's got 21 with slightly more room there. But his view is that the NASDAQ and the S&P will sort of will stay above that 20. So if you look at that, yeah. So as long as if it's holding above the 20 moving average, you think the market's in strong position, then he should be all in. And then he's also got something called the power trend as well. So the market goes up, I think something like 20 days in a it's to do with a number of moving averages all being above each other, and then the market being a certain amount of days up in a row as well in a period. So basically, the market takes off, shows real strength, tells you that you get this power trend. Basically, normally indicates that the market can really power on and last a bit longer. So he's got triggers there to get more aggressive, and he'll have triggers there. So closing below the 21-day moving average will be he's got to get a bit. He'll probably have to go off margin, and then closing below the 50 got to be in cash. So the fact that we've the S&P is now closed below the 50, that probably would have triggered them going to a lot of cash there or hedging or something like that. So I noticed Minervini put a hedge on about 9 days ago. 1, 2, 3, 4, 5, 6, 7, 8, 9. This might have been
close to the high.
This might have been a day or two ago, so it might have been up around here or something there. But he still had longs on. So he could basically say, market's getting a bit end of the tether, starting CP distribution days, something to see. He actually had the hedge on early, but he still had his longs on. As his longs tipped over and got stopped out, the short worked, and that's, that hedged some of the downside. So they, you are getting extended there. You feel like you're getting away from moving averages there. The pro traders there, they will lighten off. They might kick some of the positions on. You don't know how far the market can keep going sometimes. And this is, to be honest, not many markets have started to fall away this time of year. Normally they're running into the end of the year. So you might only maybe 1 or 2 out of 10 might actually pull back before the end of the year. So I think I've seen one in the last 10 years that have had a bit of a sell-off, maybe into the 24th of December, from memory, a market bounce. But normally market's running up to the end of the year normally. But, the moving averages, I think, are pretty good guys there. I think the 50 is a great rule just for momentum stocks alone. So, if you're trading momentum stocks and the stock's gone below the 50-day moving average, that's not a good sign. Yeah. And, I've been trying to sort of trade around, I've been trying to stick with the two rules there this year is one, try and stay in the top half of the chart. But I keep telling myself that trading stocks above the 50-day moving average is a good thing. If I could be brave enough, I'd make it a permanent thing. So yeah, but it would limit my ability to trade some setups. But I think I would be a better trader, more accurate, less mistakes if I just traded stocks that were above the 50-day moving average. It would stop me from getting on. Yeah, the only exception for me is those strongest names maybe undercutting the lows. So we've seen a few of the stronger names there. I think Felix might have actually. Yeah, so see how it's like, it's come back and undercut the high that. Yeah, so that's under the 50 there. That's the only those real strong names when they undercut there. So there was quite a few this year. I think Orica was pretty strong as well, undercut the low here as well, and had a pretty good move. Didn't get to the high there, but yeah, I think News Corp was another one as well. Sort of stayed pretty high in the trend previously. I think to go back, look at this thing, probably in the last 2 years, it's been pretty strong trend. So it's just undercut previous swing high, then gone again. So that's probably one exception there. But yeah, I think if you could setting some parameters around moving averages around the trading, I think is a great thing as well. Because I think personally, what I would do actually is working around the market as well, Chris. Like all the best traders that I read about, follow them, and listen to them, they often had a proxy to whether all in or whether they're all out, or whether they're foot on the gas or foot off the gas, and that's usually around a moving average. Whether it's a 21 or the 50 or whatever it is, or it's usually around a moving average as well. So yeah, so it's a good thing there, because obviously if you start breaking down below a moving average, then you should basically lighten off. Yeah. So to me, I sort of I know what my heaviest weighting is like a 20% maximum position size. So if we start breaking below the like the 20 and the 50-day moving averages there, then I should be peeling that right back. So at the moment, my max, I'm not allowed to trade more than a 10% position size.
Because of the market conditions.
Because the market conditions are sort of a weak year. Yeah, and also you sort of see that market's looking extended as well. It should kind of be a bit kind of small as well. So yeah, there's not much of there's some value around and some opportunities around. Yeah, the market's been pretty weak here. It's just it's a strange market here too. I found that just you're seeing sort of, I don't know, you got ANZ that's fallen about 14% here, and CBA up until a couple of days ago was trading in a multiple twice that of ANZ, and it only had 1 day down and trading on 29 times. And and you saw, REA has like doubled in value, and Domain is down the other end. You've got commodity prices actually going up, but commodity stocks going down. There's weird behavior underneath this market. So a lot of strange things you don't sort of see a lot of the time. So I've seen more strange things in the last year than I've probably seen in the last 20 years, which are probably outside of the normal parameters of what would be normal market conditions. So that's why sort of risk management is so important here, because this has been a real momentum market there, up and down. So it's kind of crazy year, but I guess you just possibly we're seeing the rise of trend traders. Maybe there's more trend traders in the market here. So
I love the sound of that. The rise of more trend traders with momentum traders. We love watching that. We love doing that. So that could be a good 2025. And but so we hear what you're working on for 2025 and top half, possibly do that even more so, with that one exception of just undercutting for the leaders that went through the model books. For those who are watching, thank you very much. Could you please like the video? That'd be a great help. And then comment below to let us know what you'd be working on in 2025. Maybe that will cross over with what we're doing. Maybe we can shed some insight into that into next year. But This is our last recording for with Gary for 2024, and we'll come back second week of January. Both refreshed, and hopefully all the viewers, you're refreshed. You've had a chance to review your trading. And any final thoughts of wisdom, Gary, or just well wishes?
No, I think if you go actually and watch some of those model books as well, I think we did cover one previously with that as well, Chris, about that relative strength as well, about the sort of stocks that, so if you look at, because this is an interesting time, I know Minavini will say this as well, is when you do go through a bit of a corrective process, or market has a bit of weakness there, we're looking for the stocks that hold up the best here. So, I've already made a list of the stocks that held up the best this week in a pretty weak market. So just to sort of see what's holding up here, because we know when the market does have a pullback, the stocks that hold up the strongest, they're the ones that sort of come out there. I mean, there's like the strongest stock on the board will be at a new high within 2 weeks of the market making a low. So I'm looking forward to finding out what stocks those are. So what stocks are at new highs within 2 weeks of the market making having a deep, or having like a pullback and finding a low there, because those will be the stocks that we need to follow.
Yeah, and how you've laid out 2025, and then talking about the shorter pullbacks, 45 days. Exactly what you're talking about is identifying those leaders. I know historically, my best trades come from a washout type of situation, not a massive market capitulation, but the type of washout that you've talked about happens in 2025. You see the rise of those leaders that are relatively performing. There's a coil of compression as the rest of the market keeps falling away. As that market turns, they're sort of compressed under their recent high or a relative high, and then they become those market leaders. So I'm excited about it because I know that's where my best performance comes from. So that's a good lead into the end of the year. Thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.